great to be here this afternoon. Thank you for having us. My name is Laurie Stein. I'm the co-head of the Fintech group at McCarthy's and a capital markets lawyer by training. And I'm delighted to be joined by really like an all-star panel of stablecoin gurus. So to my immediate left is Alex Mcdougall, who is really stablecoin OG and is the president? He's the head of Stablecorp, which has been working on the first Canadian dollar-backed stablecoin for a long time and has been making some great strides that we'll learn a little bit about. Next to him is Richmond, who's the general counsel and head of business development at Shakepay, which is one of Canada's oldest and most well-respected crypto trading platforms. And beside him is Lucas Matheson. He is the head of Canada at Coinbase Canada, which is the Canadian branch of Coinbase, which is the most well-regarded and well-regulated global crypto trading platform, I would venture to say at this point. So we're going to talk about where we're at right now with stablecoins in Canada and why it matters to you all, with the assumption that most of you are in the traditional finance space. You're interested in the intersection of digital assets and the businesses and institutions that you know and that you're working with. So that's specifically the purpose of our discussion. And you've probably heard that there's been a lot of developments in stablecoins happening in the US since the election of Donald Trump, and in particular over the past couple of months, there's US legislation that just passed an important procedural vote in Congress called the Genius Act that's looking like it's going to be adopting a prudential regulatory framework for stablecoins in the US. And just last Thursday, the Wall Street Journal reported that there are discussions of a bank-owned stablecoin consortium coming out of the US, including JP Morgan, Wells Fargo, Bank of America. So those are some just examples of very recent news that's been happening, and we are going to learn about what is happening in Canada and what's not happening in Canada, and where we should go from here. So I'd first like to start with Alex, and just very briefly, so that you know the background here. I first met with the Stablecorp team at What a Bagel on Spadina in 2019. And we started talking about this really cool idea for a Canadian dollar-backed stablecoin called QCAD, and how were we going to get regulatory approval for that? And now here we are, and I'm turning it over to Alex to share with us what has changed since that meeting at that What a Bagel, and what has stayed the same?
Smash cut to 6 years later, and we're still trying to figure out how to get regulatory approval for this really cool idea called QCAD. But no, we've been at it for a really long time now, and on one hand, very little has changed over the last 6 years in stablecoin land, and I think you could make this argument in digital assets in general. The use cases have been so obvious and so simple around remittances, cross-border payments, FX, all of these big global chunky money movement issues that, where you run into the challenges of the SWIFT network today. You run into the challenges of same day or T+2, +4, +6 type settlement. And all of those things are still the biggest use cases for non-USD stablecoins, such as what we're building out of QCAD. What I think has really changed is all the depth and all the infrastructure that's continued to build around digital assets. And I think where we really try and think about the analogy I always use is the front end of traditional payments and traditional banking is getting faster and faster and faster, but the back end is still, kind of monkeys on typewriters, right? It's a lot of COBOL and MUMPs and mainframe and really, really, antiquated systems. Whereas digital assets has sort of gone the other direction. It's an incredibly efficient, totally globally harmonized, out-of-the-box instant settlement network, but until we get to the front end where it's one consumer app to send money all around the world, where you can really have it be 2 clicks and money's in fiat in another jurisdiction, until you get to that point where you're competing with the TransferWises of the world instead of the weird MoonPays of the world, you're not getting that sort of mass adoption. So I think the thesis has not changed very much in 6 years, but the ability to go from the top idea of, hey, it would be really good if Canadians could send Canadian dollars around the world in an instant and use connect with different currencies, where we've gotten a significant amount deeper is all the regulatory ties to the house, all the connectivity with advanced payment rails, all the on-chain FX, all the partnerships that we're working on in the Canadian space. And really, it's right at the cusp now of bringing this actually to market with our good partners Coinbase that we announced at Consensus a few weeks ago that we're working with.
Thanks, Alex. And that brings us to the next question. Over to Lucas. Explain why Coinbase, which we know has a strong relationship with Circle, the issuer of USDC, why you've decided to make an investment in a Canadian dollar-backed stablecoin. And that's really significant because it's a Coinbase decision, not just a Coinbase Canada decision. So it's meaningful, I think, globally. Love to hear your thoughts on that.
Yeah, so when you think about a global strategy for stablecoins, you can think about Coinbase as a company thinking about building global utility around foreign exchange, and stablecoins specifically around foreign exchange are a pretty big opportunity for us to erode margins that are currently most people currently pay on FX. So Coinbase generally has a pretty comprehensive stablecoin strategy globally. In Canada, it's just an obvious opportunity for us. We don't have a stablecoin in Canada. Alex and Stablecorp have been working on this for 5 years. They're very close. And frankly, we need a Canadian-denominated stablecoin market. We see a lot of jurisdictions around the world with a denominated stablecoin that's growing, and we don't have one here in Canada. And so, Stablecorp has, they're furthest ahead, I think, from our perspective, and a really good opportunity for us to bring a Canadian-denominated stablecoin to market because, frankly, we need one. All of us will be using digital assets in the future. Stablecoins will form a natural part. I think people in here specifically around the programmability of stablecoins. For folks that aren't familiar with stablecoins, many people think of them as a platform because you can program money. And for a lot of you that are in the lending business, I imagine you'll be thinking about programming stablecoins and payments around leveraging the full extent and utility of stablecoins is a pretty big opportunity. And we just see so much demand here in Canada for digital assets generally.
Thanks, Lucas. And Eric, can you share with us, you're very experienced as a general counsel of multiple crypto trading platforms, co-founder of Tétrault Trust Company. Tell us about the Canadian regulatory environment and why that might have been impeding a Canadian dollar-backed stablecoin, and also your outlook for the future.
So the Canadian regulatory environment has been, it's had a lot of positives and it's had a lot of silence. The positives has been we were the first jurisdiction to launch a Bitcoin ETF well ahead of our counterparts in the U.S. We regulated crypto trading platforms like Shakepay and Coinbase and others, or created a framework for that. And so that's all the good that we had, and we had a lot of positive momentum from that. Back in I'll call it early 2020s. What sort of happened is there's been silence. And I think what's sort of happened is people within federal and even provincial levels of government felt like, okay, we've done enough with this industry. We're good here. We've solved all the issues. But crypto moves at lightning speed. There's a ton of different areas, stablecoins being one of them, where this unique asset class can really revolutionize everything people in this room do. And there's really been silence on it, is the most to talk about, or where regulators want to play a role, or where government has not played a role, regulators have played a role, and that's been problematic as well. In particular bringing it back to the stablecoin topic, the notices that have been provided by the Securities Commissions in Canada essentially has regulated stablecoins as securities, which is problematic for the ones who understand payments in the room because payments cannot be a security when you're using it to buy goods and services. And so that's the biggest thing. And that's why, Alex's question earlier for the ones in the room on the previous panel was really relevant, is when will we get more from our federal government, even from our provincial government as well, but federal, payments falls within the federal mandate. And I do think some of the ways that it could be interesting for people in this room is, how you can bring it into some of those things that Alexis was talking about on the previous panel. Affordability would probably be the biggest one where stablecoins could have a major impact. Immediately, I can send money from one person to another, not just in Canada, so forget RTR for a second, 24/7 instant settlement, but you can send it globally, instantaneously for pennies. So for literally nothing. And that's sending it from one user to another instantaneously. And that's extremely powerful. And immediately, if I want to send funds to a merchant, they don't need to be taking the 2 to 3% that they get charged typically from the Visas, the MasterCards, et cetera, of the world. So there's a lot of power there, and I think what the federal government and provincial counterparts need to do a better job of and need to really recognize is the benefits that this technology can really provide for them.
Thanks, Eric. Relatedly, I'll just explain a little bit about the payment use case, and then I think it's important to think about beyond the payment use case. But just, I got an interesting anecdote from a client that's in the space, and that also just was talking about how the Visa network manages the 48-hour weekend period when it can't receive payments from banks. And effectively, all the merchants on the network or the financial institutions accessing the network that are card issuers need to post collateral with Visa over the weekend to secure all of the debt that their cardholders are racking up. And it's like bazillions of dollars in capital for 48 hours that if we had an instant payment settlement instrument, we just wouldn't have to wait that time. And so it's not surprising that Visa and other card issuers have really been at the forefront of research into the payment use case for stablecoins. You can go, Visa has a live dashboard online where it's tracking stablecoin activity, a whole bunch of different stablecoins all over the world, and it has like an academic research methodology for how it determines whether the stablecoin is being used for speculative crypto trading, which was its first use case, or for traditional payments. So it's really interesting to see the charts and how it's tracking the activity and how the payment use case has really just gone straight up and to the right. So enough about the payment use case. Alex, why don't you share some of the other use cases, and in particular for this sort of capital markets crowd here?
Yeah, absolutely. And I want to build on some of a bunch of the excellent earlier panels today. The embedded finance one is critical and super interesting. So we were talking about programmatic commerce before. And I think all of the thrust of that panel was around how is this getting faster? How is this getting more embedded? How is this real-time credit? How am I integrating it into all of these point-of-sale systems? And the implicit assumption in all of that is that, well, of course, I need a facility from a bank or to do it off my own balance sheet in Canada because that's the only way that I can move money around at a speed that's relevant for buy now, pay later. Until you have a global network of stablecoins. Then you can draw credit from literally anywhere in the world, have an FX swap baked in real time, and draw down credit into Canada from anywhere in the world. That completely changes the game for buy now, pay later and for real-time types of embedded financing. You're going from being captive by 6 banks, basically, and some additional financing solutions, to a literal global market. And all of that happening, especially if it's already on chain, in real time. And so there's these mindset shifts as you sort of upgrade what is possible within your world. And I think we need to have a little bit of an expectations reset of what we can do with this type of technology. And I'll just talk about 2 other ones, sort of getting a little bit further down the line. Another one that I love is the idea of when you're roaming in a different country. If anybody ever is familiar with telecom, when you go down to the States and you use the Verizon network or vice versa, it's happening all over the place, all over the world, all these kind of piggyback roaming networks. And there's billions of dollars. This is about a $6 or $7 billion cost just to reconcile that. And when you start having programmatic commerce that's entirely on chain, when you can turn a cell phone call into what's called an oracle, basically, you can just settle those roaming in real time. So as you're doing it, the stable coins are flowing back and forth across the border, and all of that friction is gone from the system. So it's things like that where it's like, okay, cool, the Swift works okay, it takes a day, it costs me 1%, but whatever. But when you start thinking a layer deeper of like what sort of business models can be activated by having real-time commerce around the world, it is an entirely different scope of activities that you can now undertake. To have a machine speed payment network, you need a machine speed dollar as well, and as the world gets faster and faster. And the last quick one I'll point out as well is, again, as we get smarter, as our front ends get smarter, as AI becomes more and more what's driving this, and this is a huge focus for Coinbase as well, AI agents and agentic payment solutions, you need to, again, have a real-time rail that you can empower as you're making these agents smarter and smarter. You need to have an on-chain and you need to have a real-time machine speed asset like a stablecoin that can actually work at the same speed. If you have an AI agent that's doing something in real time and then you're making the payment 2 days later, you lose a ton of the magic, right? So it's really that sort of next generation of use cases that I'm particularly interested in, and a bunch of kind of the current stuff that I'm working on as well.
You just inspired me to go totally off book and ask Lucas a question that you were not prepared for. Are you okay with this?
I'm ready.
Okay. So my question for you, as you know, the representative of Coinbase, which is, as we mentioned, the largest sort of global crypto trading platform that started in the West, I would say. Stablecoin from a crypto native issuer versus a TradFi, like bank-owned type of stablecoin. How do you see, what are the pros and cons of both of those approaches? How does it impact your platform?
I think it really comes down to distribution, and that's what a lot of businesses are trying to figure out now, is how do you distribute digital assets into a retail economy and institutional economy. Obviously, we all have our retail apps, but the banks, specifically in Canada, right, have 80% of the people, 90% of the money. And so when you think of banks distributing stablecoins and building their own efficiencies internally, personally, I think the USDCs of the world, specifically Circle, which if you're not familiar with, Circle is a US company. They issue USDC, which is a US denominated stablecoin. They pride themselves on being sort of regulated around the world and compliant, and they publish attestations online, and they're audited, etc. I think because of the speed of crypto, I think issuers, like private issuers like Circle, are going to be able to move a lot faster and innovate a lot faster. But I'm really inspired to see banks like Standard Chartered and the Bank of America starting to integrate stablecoins into their banks. And that's exactly what we want to see here in Canada. We want to see more Canadian banks starting to actually take steps and integrate products and services into their product, and that's what we're seeing in the U.S. So personally, I think we will see all those experiments in the U.S. and around the world with banks issuing stablecoins. But I think it'll be. My concern is that we will have 100 U.S. denominated stablecoins, and that's obviously an exciting time to be alive. Is that we're alive during a really exciting time of innovation in crypto, where we're seeing people try out a whole bunch of different approaches to it. But that's my general take.
Eric, Shakepay is known to be a very sort of Bitcoin maxi type of trading platform. What that means is, unlike a lot of the platforms that list hundreds of different tokens, Shakepay really has stuck to the core Bitcoin and Ether, like the sort of two largest and most well-known crypto assets, and is now very interested in specifically stablecoins. So can you explain why that's where the direction that Shakepay is looking to go in instead of, for example, different kinds of altcoins?
Yeah, I mean, so Shakepay, like the vision of Shakepay is really how we can help Canadians generate long-term wealth. And how do we do this? We think the best asset to do that is with Bitcoin. So how can we basically bring that everyday payment life cycle that a customer is accustomed to, depositing paychecks, paying bills, earning interest on your fiat deposits, and enabling them to earn Bitcoin through those activities. So for example, if you have a fiat balance or like a Canadian balance at Shakepay, we'll pay you interest, that 2.5% or so that you get from your bank, but instead that interest gets paid out in Bitcoin. On our Visa card, instead of getting 2% or 3% back in rewards, cash back, we'll give you that back in Bitcoin. And so it's how do we help Canadians generate more long-term wealth using this true store of value that as we've seen over the years, you see the continued appreciation of Bitcoin. But then on the flip side, going to the question on stablecoins, Shakepay really trying to embed itself further with the Canadian payment system. So, for example, we're a Ciro dealer today. It used to be called an IROC dealer. We're a Ciro dealer today, and we've become a Payments Canada member. So what that enables us as a platform to do is become more embedded and closer to the banking rails that people in this room are accustomed to. The batch payment system, the link system, et cetera, et cetera. But above that, and where stablecoins become very interesting, and what Shakepay just recently announced and launched is USDC. on our platform, but the way USDC is used on Shakepay is as a different payment rail. So you can deposit US dollars. How do you deposit US dollars? There's a few ways. You can use the fiat rails, right, that people in this room are accustomed to, wires, or you can use USDC as a deposit mechanism or withdrawal mechanism. And that's really where you see stablecoins being the most useful. You can't send a wire over the weekends, or even US holidays, I don't think, or Canadian holidays. But you can do that 24/7 using stablecoins, and that's where it becomes really powerful as another tool in the toolkit that we can offer.
For those of you who aren't super familiar with BlackRock's U.S. Treasury's security tokenized fund in the U.S., which is offered on a platform called Securities, which is a FINRA registered broker dealer that is offering security tokens, one can subscribe for units of that fund using USDC. So that's a great example of sort of a capital markets use case for USDC. Alex, over to you. Can you talk to us a little bit about, we know that there have been regulatory challenges around getting QCAD approved in Canada, and we also know from the previous panel that it's not on the top 30 or 40 list of priorities for the Carney government, which is fair enough. I mean, they're dealing with a lot of stuff right now. But for what kind of regulatory change, even incremental regulatory change, are you looking for to try that would really help to get your project and similar projects a little bit more support in this country?
Yeah, and that's a interesting way to frame it of what sort of change needs to happen, because the way that we always think about it as entrepreneurs is we just need a framework. It can be an imperfect framework, but just give us something and we can create products and we can create solutions and we can create things around it. The current securities law framework for stablecoins is absolutely an imperfect framework. But we're coming to market in the fairly near term with something that works-ish within that solution and within that structure. Now, if you want to take an example from other parts of the world, that's really where I think, particularly the US, MICA in the Eurozone, MAS in Singapore, the Bermuda DABA license as well, have all taken really good steps forward towards regulating this as a prudential asset, so similar to e-money, and which just takes a lot of the gloves off. But we were at a conference in Amsterdam last year, and a lot of the stablecoin issuers over there were complaining vigorously about MICA, that it's too heavy, it's too this, it's too that. So there is no perfect framework, right? This is a very new industry, and this is a very, as much as the industry and the technology is evolving, the regulations around it are evolving as well. So I think what we really care about is let's not go away and navel gaze and leave it gray forever and ever and ever. We're fine with an interim framework that doesn't quite work, but let's get something out there, let's iterate, let's figure out where it doesn't work. So it really is that conversation with the regulators and especially from leadership within the Ministry of Finance and the Carney government that's open to having a two-way conversation, open to doing consultations, open to doing real sandboxes that aren't just to trap people, and really just to have that sort of ongoing dialogue, because that's really what this is going to be. And even other jurisdictions that have it right, it's brand new legislation. We have no idea what's actually going to work there. So I think that's really what I want is a conversation rather than change this line of regulation to that right now.
I actually thought one of the comments on the last panel that was interesting was, don't go to the minister first necessarily, like start with the key staffers, start with the key policy advisors. I know that we are looking to talk to people at all levels of government. And I say we, although I am not a lobbyist, I am a lawyer. But I think it is true that especially with the new government and the new priorities, it's important to think about a strategy that will educate before trying to push something through prematurely. So Lucas, can you share a little bit about the government relations type of initiatives that you would like to see that could support the growth of stablecoins in Canada?
Yeah, absolutely. One of the things in Canada that we're really lucky to have is a united industry. Like Eric and I, we've known each other for years. We sit on lots of panels together, but we also do a lot of work together behind the scenes to educate our government. And we have 2 strong industry associations in Canada, but we also do all the staffer meetings. We've been doing this for years. We know the Liberal Party very well. We know the Conservative Party very well. We spent years trying to educate MPs. We've launched Stand With Crypto. We have 30,000 advocates actually that signed up in Canada to Stand With Crypto, which is an advocacy group to help our members of parliament understand this opportunity. You know, while it's not top 30 or 40, and I always ask if it's top 50. In every MP meeting, I always ask, is crypto in your top 50? I think that's really the challenge and the opportunity for us, is that our government has frankly ignored crypto over the last decade, our federal government. And we need, and that frankly is understandable given some of the history of our industry, but in 2025, we can't ignore crypto anymore. Governments certainly cannot ignore crypto anymore. And that's why, while we speculate that it's not top 30 or 40, I think it's TBD. And I think we need to give the government some time to orient, because governments all over the world are moving faster than ever to regulate stablecoins and crypto. We're seeing that actually in the US. We're seeing finally real legislation coming in. And for those of you who are new to crypto, if I could just take 1 second, part of the challenge here with stablecoins, right, is that at the federal level in government in Canada, we have not defined crypto. It's not a thing yet. And so what we face in the industry is like a round hole, square peg, legal definitional problem where we have this technology and we're trying to jam it into a securities regime that was developed over the last 30 years for TradFi, and it doesn't work for us because this technology that we're bringing to Canada is quite different. And so the government needs a lot of education, but we do have champions in government. I don't want people thinking that our government is not supportive of crypto or understands crypto. They do understand crypto. There's smart people in the government that have been working on this. Obviously, there's not enough people, and we don't have an individual that is in charge of crypto like we do in most countries around the world. We have a crypto czar, or we have, you know, a minister that has been tasked with being responsible for crypto. And so we're hopeful that our government will assign an individual in the government to take ownership of the mandate of crypto and identify a strategy for the country, because we need our federal government to prioritize this. We need to get it into the top 10.
The story that I heard, and this is lore, it's not confirmed, but that probably now it's around 2021, there was a meeting of the heads of agencies across all the financial regulators. And at that time, it was around the FTX time. So it was like during the last sort of crypto meltdown. And there was a little bit of concern around the table about, you know, is this creating consumer protection issues? Should we be worried? What should we do? And this was a combination of federal and provincial regulators. And nobody raised their hand. This is what at least the securities regulators say as to why they ended up being the de facto regulator, was because none of the prudential regulators, federally or provincially, wanted to raise their hand. The Bank of Canada didn't want to raise its hand. So it sort of fell into the lap of the securities regulators. And even though they've been primarily responsible for developing the framework, it's not because they think it's the only way that it can be regulated. It's just that there hasn't really been anybody else. Just sort of back to what Eric was saying, which is that it's just stood still. So I guess to sort of close out, we've just got a minute left, but what is at stake for Canada, Eric, if and we'll all take this, just like a quick comment, but what's at stake for Canada if we just keep this inertia, this standstill, not moving forward? What's it going to look like in 5 years or 10 years?
We will fall behind the rest of the world. I mean, you see it in the U.S., you see something in Europe, which is the MiCA legislation. Canada will fall behind. I mean, we've already sort of seen it a little bit on like what happens with real-time rails, what happens with open banking, when other jurisdictions sort of take the lead on those projects. Now, this is happening in way more jurisdictions than there's open banking today, and way more jurisdictions when there's real-time rails happening today. So I think Canada will just end up, it'll end up hurting jobs. It'll end up hurting from an affordability perspective. In Canada, unfortunately, from a financial perspective, I think most of the people in this room will agree, we're okay with the status quo for some reason. But as most people know, we need to continue to innovate as a financial industry, and that's what stablecoins really provides. And that's why in 5 years, if we don't see a change, especially what we see going on in the U.S. right now, we will be very far behind from a payments perspective.
And Alex, I know you want to get in with the last word, so please.
Awesome. And just to give a size of the prize here, stablecoins settled 3 times the amount of the Visa network in the last year.
250 billion today.
Like the size of what's actually happening here is unbelievable, and precisely 0 of that is happening in Canada right now. So, the Canadian currency is the 5th highest traded currency in the world. There's $360 billion of Canadian dollars held in foreign national reserves, of banks' reserves. There's 300 billion plus that goes across the Canadian-U.S. border every year. There's 10 billion in remittances that go in and out of this country every year, and every single one of those transactions could be done better with a stablecoin rail. So there's fees that are being charged to individuals and users. There's days of settlement delays. There's collateral being put up. All of that doesn't need to happen. We do have a better set of rails to get it done, and we risk losing out on our status as a leading international commerce participant if we don't get this done right. And the last point I'll make is you cannot have a national AI strategy without a national stablecoin strategy. You need to power up your AI with the ability to make payments and move assets around. So this is not, AI is definitely in the top 10, and by definition, digital assets needs to be as well.
Thank you. Great answer. Thanks, everyone. This was fun. Thanks for listening.
Thanks.
Mickey?